Now, we got to go over to gas, right?
We can pull that up. We can.
Yeah. And folks, if you haven't test drove the Nadex platform, great time to do it. You can come over to our website at TFNN. You're going to see the banner on the top or the side. You can bring the exchange up and follow us as we take a look at these different contracts that you can trade. As we said a little bit earlier, normally if you're doing oil, there's an 11 o'clock expiration, but today that is at 11, so do not trade that 11 o'clock expiration inside the oil contract. Well, you can trade it, but if you're looking for the news would be in the natural gas, because that's going to be coming out at 10:30.
And quite a run in natural gas leading up to this, right?
Yeah, look at this. So, is that 271 to 274?
Yes.
Okay.
Yeah. And even just pulling it back a few days to like September 5th. Some volatility for sure.
Yeah.
So right now we're at 274. And it looks like you have some good options with, again, that 275 number being either the middle, the bottom, or the top of the spreads.
Right. Was it last week I did both sides? Was it the gas?
Yeah. It might have been.
It was. So,
so you'd be buying the one with 275 as the floor.
Yeah.
And you'd be selling one with 275 as the ceiling. Right? So again, you have about $25 in total risk. You can see max loss on each side of 9, 14, add them up, $23.
That's pretty cool.
It is. We'll see what we do. We have 3 minutes. We have 3.5 minutes.
That's plenty
until
of time.
The news. Exactly.
That's a lot of time. You stay right there, folks. Tommy and I are coming right back. Dow right now is down 60. Nasdaq's up 26. S&Ps are off 650. We're going to be right back. Welcome back, folks. So natural gas, we just get some numbers out, and what I end up doing, folks, I end up buying and selling.
Yeah. So you went for both. You went for volatility. I think you paid just about $25 for both contracts.
Yeah.
And so at $25, right, your break even then is going to be 2.5 cents. So 277.5 on the upside,
okay,
or 272.5 around. That's your $25. Just to put it. So, and right now we're above that level on the top side.
So let's see what they said numbers-wise here. So let's see.
It's going to be less natural gas than they thought. There it is right here. Stockpiles only 36 billion cubic feet, and they expected 42 billion cubic feet.
There you go.
They have the breakdowns here. I guess the analyst forecast was 39 to 49 even.
It's quite a spread, right?
Yeah, it's quite a spread. Either way, it's even higher than you'd see at the 42.
Right. Yeah. Now watch this, folks. And Tommy and I were talking about this and this is why I went both ways too. One of the reasons that if you take a look at the UNG, which you have the gaps on it, right? So there was a gap higher up there at 820, and then there was a gap lower, like at 788. So it's like, okay,
and
man.
we were trading right in the middle at about 805, 6.
It's like, okay, bottom line is that, we can go up, fill that gap, and
and this is where you're going to get some volatility for sure for the next half hour, but you can put in your order. We'll see how it plays out. I know that's what you wanted to do, but you can always have your order in there too, because as we see the spikes go up, we'll see where it plays out. These only go till 11 either way.
Right, and as we talked like last week too, is that what you can do when you get a decent spike, the bottom line is that you can sell one half of that spike, the profit, and if it comes back the other side, it's like you might really get something going.
Definitely, yeah. And I just pulled up, so let's jump to take a quick look at oil. So even oil at 11 o'clock, so they have spreads, binaries by the hour, so you could trade the 12 o'clocks, or you could just go for the day if you wanted to, and you could trade the 230s. But if you're going to exit them and have orders already in place anyway, that's not a lot of premium time that you're paying, which is nice. So right now, oil's just above $46. Yeah, so you have one with 46.25 being the ceiling. You have one with 46.25 being the floor.
Okay.
You can see it's always nice, and we almost had it in natural gas, where the ceiling and the floor are where it's trading at.
Last week was perfect.
Yeah. And this week was pretty close too.
Yeah.
And you'll see though the differences in terms of, right now if you wanted to sell the one with it at 46.25, let me just get them straight and lined up. So you're going to have one with 46.25 as the ceiling, going down to 44.75. You're going to sell that one, right?
Right.
because you're almost right at it. It's at 46.10 basically right now, and then you're going to have one at 46.25 at the floor. Now the difference is there's no intrinsic value in the 46.25 at the floor because it's below it,
right.
Whereas all your intrinsic value is the one that's short. So that's a little bit of an adjustment. You know, that changes the dynamic a little bit.
Yes. You know, the way oil's been trading, there's going to be volatility in that market. I mean, last night when I was on the air at 5 o'clock, I think that's when the API number came out, and that thing shot up like, $1.20 in about a heartbeat.
Yeah. So it just turns into a more expensive trade when it's further away.
Right.
Because you're still going to be paying for, like right here, 46.25 is the floor, right?
Yes.
And they know that oil's coming, and there's a little bit more time. Right now it's only 10:35, so there's an hour and 25 minutes.
Right.
So you're still, even though you're completely outside by 15 cents, you're still forced to pay for this $23. I mean, you saw that we just put on that whole entire trade last for natural gas for $23.
I know.
Whereas this side that has no intrinsic value at all
Right.
is $23. So the side that has 15 cents of actual value in it, that
Yeah.
one's going to be like $40.
Right.
So that's where that trade alone would right now for oil will cost $65.
Yeah, which you need big volatility.
You do.
Yeah,
You
right.
do. And you have an hour and a half versus having 33
we'll keep looking
minutes.
at that as we come up to 11 o'clock hour, too.
Yeah. And there's natural gas, so that was nice. You're getting a pop to the upside.
That's a good move, man. Yeah. Welcome back, folks. Tommy O'Brien, Tom O'Brien. We do appreciate your growling a problem with us out here. And don't forget, folks, as we're going through these Nadex defined products, you can test drive the whole exchange by coming over to our website at TFNN. Hit the banner, and you can download the platform. They'll put $25,000 of paper money into your account.
So one last thing I just wanted to look at for oil. So right now, oil is literally trading right at $46, which is perfect on the mark, right? So they have trades, if you go to the 230 section for oil. Now, these are kind of the master daily ones, right? Now, these have spreads from 46 to 51 or 46 to 41. So you have actually a $5 spread where it is right at 46.
Right.
Where the ceiling and the floor and the different spreads. So, of course, if you were looking for volatility, right, you'd be buying the spread that goes starting at 46 up to 51.
Yes.
So you're buying that for about $34.
Okay.
You're getting in at 46.34 versus the market being at about 46. So you're paying $34 there, and then you'd be selling the one with 46 at the ceiling, and that's at about $31 difference. Where because you're selling it at 45.69, whereas market's trading at about $46. So you'd be putting up $65 for the two contracts.
Right.
And so you'd need oil.
65-cent move, right?
65 cents would be your break even away from $46 in either direction, right?
That's pretty cool.
Yeah, you have $5 of movement where you're gaining profit, and $5 for a maximum of 500. So your max profit in this trade, assuming that only one would ever close out for value. Now you could close out one spread and then the market could reverse, but let's just say that only one is $500. And first, getting a $5 move maybe might be a little bit outlandish. Anything's possible, of course.
Right.
But $1.50 to
getting a buck half move is not
possible.
Right. We had a $1.40 move last night.
Right. I mean, we had a 50-cent move just in the last about 30 minutes, 35 minutes. So that's just kind of going over the options, and that's the cool part where you get used to everything and see, depending on what you think the market's going to do, how big of a move, and what direction, right? And now the other side is if you just think that the market's going to pop gangbusters, or go one way or the other, you can get either side of this trade for only $30 to $35 with the $500 of upside potential, too.
Which is really, directionally, that's very inexpensive.
Yeah.
Particularly when you think that, if you're trading the futures, folks, a point move, a dollar move, it's $1,000.
Yeah, and that's, to have profit potential all the way to $5, you're not paying much premium for the right for like the third, fourth, and $5th of profit there, because there's a very little probability that it will happen.
Exactly.
But it's nice that you actually get to reap those rewards if it ever did.
Absolutely huge.
All right.